Verified as one of the best traders in the world because of his rankings in the Robbins World Cup Championship.
Trying to take a falling knife. Maybe 1 time out of 10 you take it, but there is a huge probability that while you try, you get cut. I don't try to take the lowest low and run because the probability is really low. I just try to join the market at the correct moment. I want to be in the direction of the pressure.
Introducing Fabio Valentini, a world champion and internationally recognized scalper in the futures markets, with hundreds of executions per month and verified track record of 100 to 200% in a single quarter in the competitive environment of a World Cup Championship.
Participating in the World Cup, I refined my process and I understood that the best way to get a really impressive performance, keeping the drawdown low, is to start with you took a long, it's already 1 to 3 risk to reward. You can decide to close or to keep the position. And you know that the probability that you will reach the third standard deviation is 7%. So in 100 sessions, only 7 sessions need to reach the third standard deviation. Would you keep the trade open or would you take the profit? Before everything, you need to have a trading model and you don't need to go out of the trading model, because the only times I went out of the trading model, it was always lost, stop.
I'm interested to hear now, because you kind of touched on 2 areas. One, which is the initial reactions of the market, a cause and effect relationship of volume and price. And then you also have statistical data on your side. What do you more believe in, of just data, a large sample size tendencies, or real movements you are seeing in the day based on volume and price?
This is a really interesting question. And
well, ladies and gents, we have a trader who is wearing a Whoop band. So I need to know the stats behind it, because on certain days, 30 trades in a day. We have a champion scalper, and if I'm not mistaken, you've ranked 3 times in the Robbins World Cup in the scalping division and come second a few times and also 3rd place. So phenomenal stuff. And I want to start off with just asking directly, how many trades do you take an average week, or in the World Cup, how many trades have you taken?
So in the World Cup, there is an average of 500 trades every 3 months, because it's a quarterly cup. So in one cup it was like 350, the other one was 600, the other one was 550. So around 500 trades per cup. And I think it's the only way to keep the drawdown low and get a big performance, because you need a big data sample and a lot of execution. Otherwise you can just go hard on risk, but it's like gambling, because you need 5 lucky trades. And it's not my approach. So I prefer to, if I'm joining the competition, I'm scalping every afternoon from the starting of New York session to late night in United Arab Emirates.
Okay.
And there is another guy on the other side of the planet in Malaysia, that is Nazri Khan, that is my main competitor. Also, he did 223% and he's scalping in the exact same way I do, footprint scalping.
Okay. What was your performance in the World Cup?
Now, if I'm not mistaken, it was 68% in the first cup, 88 or 89% in the second one, and 218% in the third one.
Okay, so I'm going to guess and say the year you did 200 was because of the exponential days approach you have.
Yes, so participating in the World Cup, I refined my process as I improved also as a trader. And I understood that the best way to get a really impressive performance, keeping the drawdown low, is to start with low risk and compounding the account and using, for example, the profit that you made in the first 2 hours or 3 hours of the session to make additional profit. So let's say that I start one day with 3 take profit. I risk 0.25% and I take, for example, 1 to 4 risk to reward. So at the end of the first 2 hours, I have 3 targets and I am 1%, 1% and 1%. So I have a total of 3% on the account. I'm taking 2% on the side and I'm opening 2 trades with 0.5%. So it's increasing. Yep. Why? Because I noticed that my profit is concentrated in very few sessions. So the big amount of profit I do is when Nasdaq rally and I join the trend in the correct moment. And when the strategy is not working, because maybe you are in consolidation, it's better to don't trade. So I take maximum 3 stop loss per day and I'm done for the day. If I have a streak of 3 stop loss, it means that it's not the environment to use my strategy.
Okay. So I guess the the scaling risk, where you're just leveraging profit of the day, is a sensible way, because on certain days, at the start of the day, you don't know how many trades you will take. But on some days, it might be 1 or 2. Another day, it might be 30. So you're protecting yourself, where your worst case scenario is you're back to where you started the day.
Yeah.
Why would you take an approach of, what is the risk per trade when you are doing
0.25%?
That's how you start the day.
How I start in the beginning of the cup. As for example, let's say that I reach 50%, but it's not enough. It's a huge performance in 3 months, 50%,
Right.
but it's not enough to be in the podium. So I just start to raise my risk. So
At the start of the day.
At the start of the month, on the first month of the competition. And in the same time, I'm not starting immediately to raise the risk. Like, let's say, in the first month, I have 50% profit. In the second month, I start from 0.25%, I raise to 0.35% or 0.40%. But if I get a good day, 1 to 4, 1 to 3, 1 to 5, multiple trades per day, maybe I sit at 5% profit for the day. So I take half of it and I risk in through 2 or 3 trades. And if I'm risking, for example, let's say 2.5%, 2% on one trade, and I get a 1 to 5, it's 10% on the account.
Right.
But this 10% is compounding with the additional 50% of profit. So it's way more. This way I keep my drawdown really low, but low, I mean below 20%. But to achieve 218% in 3 months, it's more than 1 to 10 risk to return in the concept of risk. So it's really big.
Do you think many traders in the World Cup, or in general, like someone who's just looking to make profit in their life, should modify an approach like this? Or because I've had a lot of traders that just do 5% risk per trade, or they'll have an A+ setup and they have more conviction, and then they will scale into that with more risk at the beginning, as opposed to compounding a day.
Yeah, this depends on the number of execution that you have. For example, let's say that I have a trading model that is only giving me 10 trades every 3 months. The only way I have to make a good amount of profit is to raise the risk. I don't have this problem because I have a lot of execution. I have a huge amount of stress, but also a lot of execution. So, but yes, maybe you are a swing trader, or maybe you are intraday trader. Intraday traders maybe have 1 setup per day, 2 setup per day, and some days or some weeks 0 setup. The only way you have to win the competition and to compete against Scalper is to increase the risk per trade. Yes.
No, it makes sense. If you want to increase your rate of return, you either increase, and you have a fixed edge, and you know that this edge over 50 trades, it gives me this result. It's to take more trades or take more risk.
Yeah, there is no other way around it.
Yeah. When it comes to, because this is a question I asked outside, but I think it's good for the podcast, which is, if you are trading M1 time frame, 15-second time frame, and you're really involved in just intra-session movements and reactions, why not find a reaction early in the day and ride the wave of the day? Why is this get in, get out approach, or a trailing stop kind of approach?
This is a really interesting question, and I was trading like this 3 years ago. Then I did a statistical analysis on the MAA, that is maximum adverse excursion on price, and is the number of days during the month that you have really big explosive moves.
Okay.
And it's not so big in percentage. So I just want to compound smaller profit, but every day, instead of taking the home run 1 to 10, 1 to 15. This is another thing that I think it's a misconception in the trading field. People think that 1 to 1 and 1 to 2 risk to reward are really bad. They just want to shoot for 1 to 30, 1 to 40, 1 to 30. Maybe you will get it, but my priority is win rate. I want to see a lot of profit in my trading account, not only one profit and then a streak of 10 stop loss. Because this is really hard, and if you do a Monte Carlo projection on it, you can see that maybe you encounter 30, 40 trades of a losing streak. And this is really hard from the psychology side. You have also to consider that if you are a scalper, you have a huge impact of commission on your trading account.
And how does that play out in the World Cup with so many executions?
The commission are bigger than normal broker, but at least I'm only competing in the futures World Trading Cup. So I don't have a spread.
I see.
This is a good advantage for scalpers, but the commission are really big for the impact from commission to profit is like 10% of the profit is taken out from commission. So maybe the actual performance is 240%.
I understand.
I want to take a moment from the episode to remind you of Alpha Capital, a long-term sponsor of the show, a leading prop firm in the entire industry, and in the last year they did over $50 million in payouts. That's why they are a top-ranked prop firm that's been around for years and is not going anywhere. And with the multiple step plans they have and the multiple packages that they have, there is going to be something catered specifically to your needs at the most competitive pricing. And because we have a long-term relationship with them, we are able to bring you a massive discount of 20% off all evaluations. So click the link in the description or use the code TOT to get 20% off all your funded accounts. Working with the best prop firm in the industry, Alpha Capital.
With your strategy, because you are you gave a very nice analogy of just the gas pedal on a car.
Yeah.
You're looking for reactions and
Yes.
just little impulses of the day and just trying to catch a piece of it. What is your way to protect yourself when you're wrong? Is it just an approach of very fast break even, or do you allow the trade to play a bit?
No, so I will start with my process of creating a narrative for the day with trading. So the first thing is that the analogy of the car is that the price structure, because I still use price action, because the price action is the result of the impact of the volume. So it's really important to understand if for the day you are like aggressive buyer or aggressive sellers, and you can see only from the result of the volume, and the result of the volume is price. If I see that I'm, for example, going long really aggressive and accepting different structure, breaking structure high, like the concept of market structure or auction market theory for volume traders, to create, this is the first step. This is the direction of the car. Then I need to check the order flow. The order flow is how much they are putting the feet on the gas, how much they are pushing. And this for me is order flow analysis. Order flow analysis is my trigger. It's like my execution model. So for example, let's say that I'm long for the day and I see a retracement in price and the price reach a really important level for me. Really point of interest is called in the price action world. And on that point of interest, I'm not immediately opening the trade. I don't trade on limit orders. I just wait and I see if from the order flow I can see an aggression in price. I want to see momentum and follow up from price. So it's not only volume, it's the relationship between volume and price. After that, I start to trail my position. So to reply to your question, I start to follow the market with my stop loss. So if I see that the volume is continuing to rise and the price is following up, I'm following. Because if I have a break of structure, it means that there is a volume shift and I want to be out of the position. I also did a statistical analysis on this. When you have price that is rising and you have a breakout short and this breakout short is being followed up by order flow, so the volume is going aggressive short, there is a huge probability that I will get a stop loss. So it's worth for me to take me out of the market with some profit. Just maybe I will not reach 1 to 3, the final target, but I will close 1 to 1.5. It's still profit. And I can use this profit on my next position.
Yeah, to scale up the risk. You mentioned here that volume is a precursor for price.
Yes.
And therefore it's better to read volume to then understand price. But then you also mentioned here that you're doing an analysis of volume and price.
Yes, it's so important.
Am I correct in understanding that you're seeing volume signatures, then you're seeing the first reaction in price, and then you're trading the follow through?
Yes.
You don't trade the initial movement.
No, I never trade initial movement, and because I can relate this like trying to take a falling knife.
Yeah.
Maybe 1 time out of 10 you take it, but there is a huge probability that while you try, you get cut. So I'm not a reversal trader. I don't have a mean reversion model. I don't try to take the lowest low and run because the probability is really low. I just try to join the market at the correct moment when there is momentum, when there is volume, and when there is price follow-up. I want to be in the direction of the pressure. Because when I was not profitable, that I started my career, I was always trying to take like the reversal trade, like the last sell candle before the buy movement. I think every trader at this moment tried to take, because it's really satisfying, but it's not profitable. Like you can do this maybe in some markets, but if you take, for example, Nasdaq, really aggressive move, the probability that you will take the last candle of the day, sell before the move up, it's like 5%.
when you have found a bias for the day, and I want to get into that in a moment and how you build it. When you have found a bias in the day and you're taking 10, 20 trades in that day, will it only be in the direction of your bias, or it will be up and down throughout the day?
This is a really smart question. What I do is that I have some models to take reversal,
Okay.
but to start to take reversal, I need before some profit for the day. So the day started like this, like today. We took some profit on the live trading we did, and we were long on Nasdaq. Then there was an opportunity short, but the market exploded, collapsed, didn't give me the time to jump on the trend. But if I had a retracement, I will continue lower, and when I jumped off the charts, now I don't know how is Nasdaq, but the market was really overextended short.
Okay.
When the market is really overextended and I have profit for the day, I try to go back to equilibrium. The concept of equilibrium with volume analysis is like the POC, point of control. Is the fair value of the volume.
day.
Yes,
Okay.
and is the level that you will hit with the highest probability. So it's just a trade that is reversal, but is high probability trade.
How do you determine the fair value of the day?
The fair value of the day, I just plot the profile of the session. That is a volume tool. You can use any platform for this. From the starting of the session to the end of the session. And you will have the distribution of the volume for the day. And you will have the area and the level where the most volume was exchanged. This level is the level that you will reach with the highest probability. So if I need to do a reversal trade, I want to make sure that my profit target will be the level that gets hit with the most probability during the day.
So it's kind of like an end of day reversal play as one of your trades.
Yes.
The reason I asked, let's say this, do you ping pong of buying and selling only the direction of the day, is because you could either take the approach of you just trail your stop and whenever you get tapped out, you're out, and then you scale it throughout the day. But you could also avoid taking a partial by just selling or hedging your position and you can hold more volume on the main impulse.
Yes.
Does that make any sense for you, or you want to take each trade independent?
For me, each trade is a different model. I am really analyzing everything about a single trade, the way I manage the position, the care I have for the analysis of the order flow. I use multiple screen because I need to have the price on one part and the order flow on the other part. And it requires so much focus managing one trade, and I only can do one asset. This is the reason I only trade Nasdaq, because it's a lot of execution during the day. So I don't open multiple trades simultaneously. I only have one position because the number of focus it requires is really big. And I want to connect to this regarding, because you told me, what's the condition that you use to get also the reversal trade? Because not every day I do reversal trade. I use an instrument that is called VWAP, and it's volume weighted average price. And with VWAP, you can plot the standard deviation. That is the deviation of the volume for the day, of the volume weighted. And when you get to the, let's say, second standard deviation, there is a really big probability that you will get back to fair value, reload, reaccumulate, and then explode again.
And that initial that deviation is derived from what range?
This deviation is from the starting of the New York session.
Starts, and it's like the first hour, or
it's all the New York session. It's like developing as the market is developing, but you can also use a daily volume weighted average price. There are different way to use it, but considering that I only trade New York session, I use it for the New York session, and it's cool because it's developing as the price action is developing.